Yeah, I think on Earthquake and Leisure World over there, there are some unique considerations. Now, again, it's my understanding over all these years, and again, I've been here just across the street from your south wall for over 20 years. And it's my understanding, even in recently reviewing this with one of the residents over there that's a club president, I believe she is, we talked about this, and again, it's my understanding there really is not any sort of a, shall we say, a pool. There's no insurance policy that covers earthquake for the entire community over there, and likewise, it's my understanding there really is not a pool, shall we say, of a separate fund that's maybe being developed, being funded, shall we say, for specifically in the event of an earthquake. It's not a bad time to talk about earthquake today. It was just today that there was a major, I think over 8.8 or something level earthquake in Chile. And we had the terrible earthquake situation there in Haiti. And so, yeah, it might be nice to pause here for a moment and talk about earthquake considerations for Leisure World residents. I would recommend that you seriously consider taking out your own earthquake policy. And again, because you don't really have the master policy coverage or provision over there, it's something to seriously consider. Just even a few moments ago, I ran up a quote just to kind of get some ideas here about some information to share. On the earthquake these days, for an individual condo unit owners, we would refer to it, which again would fit the needs for how we handle Leisure World. All of the earthquake is through the California Earthquake Authority. You can also, they have a website you can check for CEA. But the coverages are such that, as an example, if you were to get $5,000 in contents coverage, which really isn't a big consideration in my opinion, but $5,000 for contents. Now on the what's called loss of use. So if you were displaced from your particular unit, had to be in a hotel, motel, another home, or renting someplace, you could have $10,000 in coverage there. And then on a big one would be a loss assessment. If you were to do $50,000, and you can go as high as $75,000, that's the maximum. But if you went $50,000, anyway, that whole policy would run you about $515 a year. So certainly not cheap, but there are some important considerations there. Now, even under this loss assessment, I think that's something that needs to be discussed, because the CEA will pay towards that loss assessment. That is where every owner over there would be assessed for their particular portion of the earthquake damage. Normally, again, where there's a master policy, you have a deductible that must be met. So oftentimes, if there's a major earthquake, there'd be considerations for the deductible. Owners could be assessed for that, but then there's the policy coverage. Well, over there you don't have the coverage, so I think you're going to have to. I see a need over there to address this issue and determine, even if you're going to put in your bylaws or whatever, that there even can be an assessment for in the event of an earthquake. But anyway, if shall we say, if it's there, if you're legally responsible, where Golden Rain Foundation, whatever, can assess you, anyway, that's what that coverage would do. That's what it would provide for you. So it's actually, very important. So there are a couple of little details there, shall we say, from a legal standpoint, that I'm not quite sure exactly where you folks stand. But at any rate, I think the earthquake is something to explore, something certainly to seriously consider.